I'm going to do the housing market in 3 years. Within the next 3 years, what is going to happen? United States housing market. So here's who we got on the panel. We got Mr. John Brooks, former Wall Street real estate investment banker, Wolf of Wall Street at that. He owns and operates a real estate brokerage, Momentum. Momentum. Basically, closed $3 billion in real estate volume, 8,500 transactions, just exited a 200-unit multifamily building. You got, what?
270.
270 agents. That's a lot of agents. And JB is the bear. The market is going to tank on the bull side. By the way, he has the balls to take on 2 of these guys. Right? So on the bull side.
You can arm wrestle at the end.
Yeah.
We won't need to.
Oh, too soon. We got Mr. Mike Arndorfer. Mike's a Phoenix-based private markets investor, LP and GP coach, has a fan club. He is a co-founder of North 40 Capital, multifamily operator, H&M QP. I don't know what the fuck that means, but through A2. Anyways, Mike is disciplined. Give it up for Mike. And then we got Mr. Mo Chomil, CEO of Alltech National Title Company, 25 years in the real estate and title biz, 150,000 transactions he's done, tech-driven. He's got offices in Africa and what? You got offices in Morocco, and is Morocco? Yeah, okay. Anyways, he's got a lot of people working for him doing title work. And he also has a podcast called Title Agents Podcast. It's the #1 podcast for title company people. So give it up for Mo. Go! All right, let's get right into it. So first of all, we're going to do a survey. I'm going to put up a QR code. Everybody hit this QR code. You're going to vote right now, whether you are a bull or a bear, on the housing market in the next 3 years in the United States. Everybody vote. Single family, multifamily, just housing, single family and multifamily. It's single family and multifamily. It's housing. It's like where people live. Like,
I agree with you. We split it.
Oh, 86%. Come on, let's see if you get it up to 100. Not that confident. 101. All right, so obviously you guys are bull. I don't know if everybody here is objective. I'm not taking sides. There's a lot of real estate people that are motivated by raising money, or they're hoping that their rental properties don't get squatted on or something. Okay, 70-30. Those are good, clean numbers. Okay, thank you for that. So right now we're 70-30. I'm going to see what it does in a half hour after these guys eloquently tell you their statistics of why you're wrong and maybe your mind has changed. Does that make sense? So first question I got for them. Let's go. The one thing these guys agree on, the only thing these guys agree on, is in the next 3 years, the number of transactions will increase, right? We're kind of in a transactional recession right now. Would you agree? So does everyone in the room agree that the transactions will increase in the next 3 years? Right. So that's the only thing they would agree on. Okay, next slide. Now we're going to disagree. How will the values of single family homes change? How will the values of single-family homes change? We'll start off with Mike. 2 minutes.
I defer to Mo.
Thanks a lot.
He's scared. What we decided this, where I'm going to cover all the multifamily and Mo's covering all.
All right, go ahead, Mo. 4 minutes. Give him 2 minutes and we'll go back for it. Go ahead. 2 minutes for Mo. Go.
By the way, he's looking at his chat GPT right now because he couldn't any good content. No card over here. Even he doesn't even believe what he's saying.
Well, I believe we have a lot of tailwind behind us, and for simple fact of Trump economics, love, hate the guy, it doesn't matter. We have a lot of tailwind behind us. GDP, the third quarter of 2025 was 4.4 for the third quarter, and I think they're predicting above 5% GDP in the fourth quarter of 2025. That's massive. And there is a rumor, if you listen to the All In podcast, there is a hint, maybe 10, 15%, which would be insane. That's a kind of, it's a little pushing it too much. There's a lot of tailwind behind us. Fannie Mae believes, through the stats and data, they think the real estate, talking about values, correct? They're going to go modestly in the next 3 years to about 6 to 8%. 2.4 in 2026 and 2.2 in 2027. As I said, there is a lot of tailwind behind us. The rate's going to keep driving down. And which also what Trump is pushing for, all his agenda from, I know a lot of you guys are going to hate this, and trying to take all the institutional buy-in of single-family homes, but he's very, very driven to lower interest rates and also kind of for the affordability for the homeowners.
All right.
Is that it? We're betting on the government bailing us out?
It's not a bailout, it's facts. It's a tailwind and not a massive tailwind.
In the last, can I go in?
Yep, you go.
All right, let's go.
2 minutes.
So the bet that you're making is that the government will manipulate mortgage rates lower. Is that correct?
It is not manipulation. Have you heard of a thing called AI?
Okay.
I think you
Let's focus.
ChatGPT, I forgot it. ChatGPT, yeah.
Use your ChatGPT.
Goldman Sachs, so far, we haven't really seen productivity yet, like the impact of productivity in the economy. So far, they're predicting about 2.5% of increase in productivity. You know what that means? 700 to 800 billions into the economy with zero additional cost. That's visionary.
Does anybody else feel like this just sounds like a bunch of hope?
This is factual.
Or can we just get into what the reality of
Goldman Sachs?
what the market is actually doing?
Has anybody heard of Goldman Sachs? They're very reputable, very respectable.
I hope that AI comes in and saves us. I hope that the government comes in and saves us. Why don't we talk about what's actually happening right now in the single-family space?
And
there's like a lot of talk, right? Because you talk about Trump out there and let's do assumable mortgages. Let's do 50-year mortgages. Let's do institutional ban on buyers. All these ideas, nothing's going to stick. This is an executive order. None of this stuff is actually going to happen. This is talk to get votes about affordability before the midterms. None of this will actually be executed in the marketplace.
But AI productivity is real. You cannot tell me use AI, correct?
So are you saying that because of productivity comes up, one of the 8 major factors is wages? You're saying because productivity will go up, is that wages will go up and that will make it more affordable for people to be able to purchase?
All I'm saying, 1% of productivity means $300 billion into the economy, to the bottom line, with no additional cost.
Right.
That's massive. Do the math.
The buyers of single-family homes are retail buyers primarily. So are you saying, again, that their wages are like, what is the purpose of saying this AI? Because are we talking the gains in the stock market will go to the top 10% who already have the majority of the wealth in this country? Or is it going to be spread out amongst the next marginal buyer? Because we all know that real estate is all about the next marginal buyer. That's the only thing that matters in this industry. So who is the next buyer of these overinflated assets that we have right now? You have to ask yourself, who's that going to be over the next 1 to 3 years? It's not going to be the first-time home buyers. That statistic has dropped from 50% first-time home buyers over the last 2 decades to now 20% of buyers are first-time home buyers. In the median household age for the home buyer is now 61 years old.
So John, you're saying prices are going to go down, correct? Or the economy's going to crash?
They're already going down.
Well, do you know what do you think?
This is the first event I've been to where I haven't been pitched by a syndicator. Thank God.
So how much equity do you think?
Come on.
There is $34 trillion in equity in the home ownership in the U.S. right now. You know how much it was back in 08?
Tell me.
$8 trillion.
Okay, cool. Right. So there's something called phantom equity, right? You only realize it when you sell it.
How's it phantom?
You only realize the money when you sell it. And hey, Mike, you actually did this exercise with me. He's actually a great guy, and he gave me a lot of advice on my portfolio. He said, sell that because I don't know why he was like, all right. He looked at my single family rental portfolio. He's like, your return on equity is only like 3%. That sucks. You can get higher in the treasury.
And John had the ability to take that money from the equity of what he sold and start lending it directly, which he could turn it into about 16%. And his current portfolio did not make that. But that doesn't mean anything's going down. So markets can still go way up and you can make 16% and still have the 16%.
Right. But we were just talking about before coming up here about how equity evaporates and a lot of people are underwater in their stuff now. And the buyers who bought from 2022 to today, they're experiencing tons of distress when they try to go resell their asset, right? Because we're talking about single family home values. Round trip on buying and selling residential real estate is about 10%. And prices have been coming down, especially in the Sun Belt, over the last few years, ever since March 2022, when the Fed started raising rates, prices started coming down. And then we've had this kind of equilibrium moment. Transactions.
That's history. We're talking about now.
Sure. Right. Well, it's important to understand where we
now.
are in the market cycle. Pending sales are the lowest. Look this up, guys. This is all out there. Pending sales for residential real estate are at the lowest level they've ever been at this time. Contract cancellations are at the highest level they have ever been in recorded history. This stuff is happening right now. The first step to a decline is transaction volume slowing. Yes or yes?
But it's
and then values follow second, and values are starting to show up slower in specific markets first, and then in other markets later, and that's what we're starting to see already.
But NAR is predicting 14% increase in transactions in 2026.
Okay, look at Yun. I don't even know how people still listen to this guy. He also did not see what was happening in 2008.
Fannie Mae predicting.
You listen to NAR. It's the National Association of Realtors. Their job is to put out pump pieces.
How
for real
about
estate.
Zillow? How about Redfin? How about Fannie Mae?
Zillow is saying that we're having the highest level of decreases across the country for prices actually coming down, not just in the Sun Belt, but across the country.
So he's saying Fannie Mae, et cetera, saying 2% increase for the next 3 years. What do you predict?
So it depends on the area, but we should definitely
We're talking the whole, this is national. We're not
national, so I can go by area.
Yeah, whatever.
You guys want, I mean, if we're talking nationally, it's really hard to predict this stuff. But if I had to say, we're going to see 2 to 3% declines over the next couple of years.
Okay, so they're saying the opposite. One's saying it's going to go up 2% a year on home values. The other saying it's going to go down.
But you have no backup data. Like you're just saying it from you. Like you're not stating any facts from any source.
He's basing it on the recession of transactions.
You have also, you're just betting on AI creating productivity.
I'm not betting on AI.
You're betting on the government bailing you out by manipulating inflow.
I just named some reputable sources. You've named zero. You named none.
You're talking about ChatGPT sucks for this. It's sad they had to get
have none. It's also objective to you.
Look, guys, this is
Mo comes out with that.
Really simple.
All right, next question. Let's do multifamily. Next question. How will the values of multifamily investments change? We're going to start with Mike Orndorfer.
All right, so I'm going to break this into 3 things. So number 1, I'm going to say
everybody,
if you invested in multifamily in say 21, 22, 23, there is billions of dollars worth of equity.
I mean, after he's finished, we're going to vote on what you think
is don't know what's lost yet.
How is this any different than what you're talking about, the equity buildup on the single family side? It's exactly the same.
Give 2 minutes on why you think multifamily is going up.
So, okay, first of all, I'm saying it's not going to go up enough to save those deals. So if you are in a deal that's screwed, you're probably going to lose all your money. You just don't know it yet.
Damn.
There is billions of dollars that's going to go that way. So I'm not talking about saving that. What I am saying, though, is that net operating income is going to go up, rents are going up, and cap rates are going to be steady to going down. And so therefore, with a 3-year period, if you own something now that's stable, you're going to be worth more in 3 years than it is currently. Now, the other thing that I'm going to say is we're starting to see a lot of really good deals come on the market. People are capitulating that missed the top, that, kept thinking that for a couple of years that they would be able to still get those prices. They're giving in. And there are deals that are showing up. We started seeing it about 6 months ago. We're going to see it all through this year. We're going to see it next year. So this is the biggest thing I would say is that this is an amazing time to put money into multifamily in specific deals with new equity.
All right, beautiful. All right. Counterpoint.
Multifamily transactions are down about 70 to 80%.
Agreed.
And it's the same formula for single family where once the transactions slow, prices follow as inventory stacks up. I think a lot of people get confused that this stuff, it doesn't happen overnight. This stuff is liquid. It takes time to sell.
I agree with you. They've gone down and we are at the bottom. We are headed back up.
See, that's where I tend to disagree based on the information that we're looking at. There's a lot of extend and pretend that's going on right now with the banks. Okay, I'm going to extend it another 90 days, another 90 days. Eventually, the bill will be due. I mean, you're starting to see some of that distress. You're talking about basically, hey, you lost all of your equity. I'm going to recapitalize, put 20, 35% down, and it cash flows.
Right. And that's what I put in that first bucket. That's the thing that you bought the building for $30 million. It's now worth 24. You're going to lose all your money. It sucks, but it's not, the price discovery hasn't been
And then your
there.
debt's like 20 million on it, right? And then it cash flows at today's rates.
And so that's what I'm saying is new money coming in, new equity that you're putting into it. There are deals that are showing up that are going to be very good deals over the next 3 years.
So Mike is talking about the future.
So, but the very
right. We're talking, what he thinks is we're already at the bottom. What I'm saying, this is just the beginning of a structural change in direction for both single family and multifamily.
Well, we've had rents stable to up. Now, not every market.
It's been down. Rents have been down 1% nationally for the last 3 years.
Actually, if you check with Yardi, rents are actually up 1% nationally over the.
Let's
get our
John has no sources.
Somebody check the facts.
John
Now,
is yet to name a source.
1% up or
markets
1%
that are down.
down nationally
So
over the
John's
last 3
market
years. Somebody check that
in
shit.
Jacksonville Yes, it's down. And if you look at Phoenix, yes, we're down over the last year, 4%. What we're having, though, a lot of times is we're starting to see so multifamily, as you know, you've got your base rent and then you've got the concessions. And what's happened is the rents have stayed fairly steady to going down a little bit, depending on the market. And you've had a lot of concessions. But most places across the country, we're now seeing those concessions get burned off and there's less and less coming. And so what I am saying is that we are at the bottom at this. We've been bouncing along it for about the last 6 to 12 months. Some markets have already started to go up. Some are still going down. But in 3 years' time, we're going to be up in rents.
And the supply.
That's the
because
main
that's a
reason.
big concern. Because a lot of people say to me, "Hey, I live in this town, and all I see is cranes."
Supply is down 70% from
apartments being
2021 to 26. And we're going to go down 30% from what we had in 25 to 26 to 27. So you've got supply. Supply is continuing to come down. And what's happened is we've had this excess supply that came into the market.
Where are those numbers coming from?
There's
like the supply in the Sun Belt is like, who lives in the Sun Belt areas? Like, this is just such BS. You drive around, there's apartments on every street corner. They're building more. They started their projects 2 to 3 years ago. They're going ahead and having to finish them because they already broke ground. They already have their financing. They already have their contracts in place. I mean, just drive around these areas. It's not rocket science to see that we have an oversupply in the Sun Belt of tons of multifamily. Rents are down 25% in Austin. They're down about 25% in Jacksonville. Florida and Texas are leading the pack. And there's always a leader whenever the market starts to shift, and then it starts to spread to these other markets. And we're going to start seeing it show up in the next 3 years. And that's why rents are already dropping, and they'll continue to drop over the next 3 years.
All right, so let's vote on this, bull or bear, on this question. Go back to the question that was just there, was about multifamily. It's basically, how will basically, are you a bull or bear on multifamilies? Go back to the question. Are you?
Yeah, go Bears.
Oh, here it is. This is the wrong.
Well, while we're doing that, I'll talk about the facts.
Single family are
So what's the
definitely going to be
single
lower.
family?
Now,
Okay, this is
CBRE and Yardi.
Are you guys voting single family? And
It says, how will the values of single family homes change? And they're going down right now.
Okay. Give the QR code to single family. Let's do single family. People in the audience, are you?
You got to remember, we're talking about the future, not the past. It's on the next 3 years.
But we're at the
Next
most
3 years.
unaffordable level in history ever from a wage standpoint compared to the prices.
Next 3 years.
It's like $1,000 cheaper in a lot of markets than it is. It's $1,000 less to rent than to buy. And it was a decade ago, it wasn't that way. Things have completely flip-flopped. Why would a renter go out and buy a house and pay $1,000 more?
I believe we keep talking about pockets, not the whole net. We're talking about national.
This is national data. I'll send you my charts later, and you can look it up on ChatGPT.
Okay.
All right.
Let's see the vote on. So
Come on,
single
Bull.
family, guys, it's almost 50-50.
Woo!
Single family homes are not going to increase in value. 50%. Single family homes
A lot
will
of
increase
hopium
in
in this room.
value. 50%. Okay, now let's do multifamily. Go to the multifamily QR code, please. Multifamily. Do you guys think multifamily values are going to go up within the next 3 years or down within the next 3 years?
You guys look at the
There's a lot of optimism.
Well, of course they're
I wonder why there's
optimistic.
more
That's what
optimism.
we're talking to. We're talking to real estate investors.
You think that's
They're
why?
pumping
We're
their
talking
own
facts. We're talking facts.
Yeah,
We're going to have
facts.
Let's go Bulls.
continued absorption.
You just said everybody
and
got
decreasing-
wiped out on their
Everybody-
equity the last 3 years.
That's
Facts.
interesting now.
Well, that is true, but that's the history. We're talking about the future.
It's still not a 70-30.
The distress hasn't even gone through the system. yet.
Okay,
It's
let's
just
go to the
begun.
next question.
We
Let's
are
talk
starting
about
to see
rents. Okay, next question is rent, right? We talk about values. Now let's talk about the real deal rent. Sometimes I hear people say rents never go down. I don't know if that's true. Do they never go down? Do rents always go up? Well, let's talk about that. So I'm going to start with John. How will rents change in the next 3 years?
1 to 0.
Sell everything. No, so rents have already been coming down for the last few years, and this is a great thing. We need rents and prices to come down for the next generation to come in, and buyers have opportunity cost. What you see is household formation is starting to trend down. Affordability is a real issue. People are not having kids anymore. They're not getting married anymore at the levels that they were in the past. There's stats out there that show like the number of people who are married and buying a house are at age 30 is only 12%. It's showing up, and what people are doing is they're moving back in with their parents. The number is 30-year-olds who are living with their parents is now 25%. So, you think that, okay, all these people, they're not buying, they're going to be renters. They're actually moving in together, and they're getting apartments and doing things like that. So I think that's going to have a huge impact on rents moving forward. And the amount of supply that's coming on the market is really high. So I think rents will be coming down at pretty similar rate. It depends on the area. Obviously, the Sun Belt, where we're completely overbuilt, is going to be a big difference. The other thing that we're starting to see is institutional investors are doing the build to rent, which is great. So they're building a lot of inventory out there. So we're overbuilding on the single family side. We're overbuilding on the multifamily side, and the demand just isn't there. The migration isn't there. The immigration just isn't there. Who are all these people you think are going to occupy these homes? They're not having kids. They're not coming to the country, and so you're trying to figure out like what's going to happen in the next few years. It's just the demand. There's more supply and less demand, and we know what that equals.
Whew. All right. Who wants a rebuttal? How will rents change? Bull.
I'm gonna go first.
Okay, so I'm just talking about multifamily. So multifamily rents, as I said, in most markets are already stable to going up. And I think over the next 3 years, we're going to be looking at increases. So definitely an increase in rents. What we have from that is, if you look at Origin, their multilytics, they were some of the best in the country, especially in predicting the huge increases that we had in rents that no one else saw coming. And so they've been one of the more accurate things. But they're thinking that Charlotte's going to be up 5.7% by January 2027, Houston 4.9%, even Las Vegas 4.9%. So we're looking at probably 3 to 4% rents increasing across the board when we're looking at this
every year
period of time. Between now and February of 27. And most of that is coming from...
Now, who's predicting that?
That was from Origin, but there's also Yardi and CBRE are all predicting rents increased over that time frame.
Let's do a QR code. What do you guys think rents are going up or down rents?
Mo needs to talk about single family though too.
Oh, you want to talk about single family rents? I mean, it's the same. What's the difference, right? So the Bulls.
I can't wait to watch this in 3 years. I was the bear on stage in 2022, and everybody's like, "He's going to keep going up." It was great. That was a great one. We should get the recording of that and put it up.
Pretty bullish on rents increasing. Like you'll be able to up your rents even a couple of percentage points.
They have to, otherwise they have to put the rents down and feel bad. I mean, their net worth's down on their one sheet. Nobody wants to write it down.
So this is going to be your last opportunity to spit any statistical data. What's the statistics that you can point to or to prove your case more? Start with John.
Which
anything.
topic?
And just anything, just the point, just the overall point.
We live in a payment economy. You know, not a lot of us in this room live in that payment economy, but the 90% of Americans live in a payment economy. There's 72% of Americans that are living paycheck to paycheck right now. The funds are getting tight. The saving rates are going down. The affordability crisis is absolutely real. When you hang out with real people and talk to them about what's going on, they don't have, they're spending up to 50% of their income on shelter costs already. So it's kind of delusional to me to think at 50%, have you ever heard of the rule of 28%? About 28% of your income is supposed to go to shelter costs, right? We're at 38% right now. And that was exactly what it was in 2008. Whenever that ratio gets to that point, we start to see changes in prices of rentals and changes of prices of valuations of real estate. So this is coming. And, I think it is not surprising to me the way you guys are voting at all, because most people do kind of vote in their own self-interest. But I created a YouTube channel about 6 months ago showing all the charts and data and all the statistics that they're pulling up on their chat GPT, and just telling the story of what's happening in my local market in Jacksonville. And it's changing really quickly. It's nuanced. Every market is very micro and has different situations. Like the Northeast is not the same as the Sun Belt at all. There's just a different setup, but they have different risks. But that doesn't mean that maybe the magnitude of the direction of the change will be different in each market, but it is starting to change. And the consumer sentiment is the lowest level it's ever been in 14 years. And so you need to ask yourself, who is the next buyer at today's prices and today's rates who's actually going to purchase? And if you can't really come up with that narrative, then you need to really start rethinking your investment strategy.
All right. Bulls?
I'm going to go back to our boy Trump. So I can say there's a lot of help.
That's right.
Well, I heard the facts coming. I'm very bullish on the economy as a whole. There's a lot of tailwind from manufacturing to the U.S., from the very, very set and very, he's so determined to drive interest rates down. But recently, it didn't
work, and manufacturing jobs have actually been lost since he came out with those policies.
About $200 billion of mortgage bond purchases.
$200 billion only equals about a 0.25%.
Okay. AI, again, ChatGPT is real. Productivity is real. every 1% of productivity is literally $300 billion to the economy with no increase in inflation. It's very disciplinary. Transactions. I know you don't like NAR, but they're predicting 14% increase in transaction.
Because prices are going to come down. There'll be more transactions.
Oh.
And again, Fannie Mae predicting 7% in 2026 and 7.4% in 2027. These are facts. These are sources. I'm not just throwing stuff out of the air. So I'm very bullish. And at the end of the day, as you all badasses, all what matters is what you do, not what the economy does or Trump or John or me. It's up to you.
All right. So from the multifamily perspective, what we had was historic overbuilding that happened in 21, 22. We are currently at about 70% down from what those levels were. Now, the market during that time frame, historically, we were at about 95%, 95.5 to 96% occupancy across the country. We have that drop by about 100 basis points. So we're down about 1% from that. But when you look at this historic number of new units coming in, we've really absorbed them really well. Now, over the next few years, we're going to drop another 30% from where we are right now. So the big bubble is already here. We've done a great job of absorbing those. And as more and more time goes by and you've got less units coming on that are new, we're going to have rents go up from that.
All right, let's go to the next slide. Does everybody understand the concept of a steel man? It's basically arguing the other side's point in their favor. Warren Buffett says he never buys a stock unless he can argue vehemently why it would fail and why he shouldn't buy it. Same idea. On the opposite of a straw man, which is like, yeah, go, good job. We're going to do steel man. So I'm going to let you guys, steel man, the bear. Go ahead. Both of you want to do it? Or one of you want to do it?
So what I'll give John is that there's a chance that some markets are not going to come back as quickly. So historically, when you look at it, when somebody comes in and overbuilds in an area, it's because there's long-term migration to that area. It's just they got ahead of themselves. That it is. So I'm going to say it is possible that we're going to have pockets that don't recover as much as what we thought. So such as Austin, maybe Jacksonville, John is,
awesome,
and Phoenix, there's some places like that. So I'm going to say it is possible that in those select markets, we don't have increased rents. We don't have increased prices in a 3-year time frame. I still think we will, but I would say if we didn't, that would be what it was. Is there are certain pockets that maybe they got so overbuilt that we're not going to be able to absorb as much, and that the net migration to those areas will not continue. But historically, that's never happened. The people who
steel man, stay focused.
Okay,
go ahead.
That's it.
Steel man, bear.
Totally gets your affordability, and you keep asking who's going to buy the next home, but you really keep forgetting how much wealth there's in the U.S. Like we do.
Wait a minute, are you steel man in him? Talking about? You're supposed to say, can't do it.
He's too nice of a guy.
I'll steel man my own argument. So, because it is an affordability crisis, there is pent-up demand. There's a whole generation of buyers out there who are on the margin and they want to buy. They just can't get the payment to make sense. So if there's a way to get the payment to make sense, and I'm not sure how far rates would have to drop. The estimates I've seen get them down in the 4s and it'll bring back a lot of marginal buyers. Maybe we get there and the Fed does step in and start buying mortgage-backed securities. And we have a bunch of immigration to this country to fill up these empty homes that are sitting. I'm trying to be the steel man. It's like I'm going to bet on the government making rates lower, and I'm going to bet on a ton of immigration to fill up all these homes that are currently sitting vacant, which is about 15 million.
All right, let's do a vote to see if anybody's mind has been changed overall. Let's get the last QR code up here. Last vote of the night. Go ahead, let's vote.
Ooh.
Seems like
change like 10% of minds.
So John won the argument on account of fact he got 12% of you guys to switch teams.
He can still be wrong though.
With zero data.
Let's keep this on tape and come back in 3 years.
What do you want me to do? Is there time for questions and answers, or do you want me to kill it?
Yeah, there's time for questions. Go ahead.
You guys got a lot of questions.
Yeah, go ahead. Questions.
So anyways, first of all, give it up for John for getting a 12% swing. Good job.
Good job, John.
Give it up for the Bulls for their valiant effort. And now let's do some Q&A. Go ahead.
Great job. John, I have a question. Trump's going after the Fed and pumping a lot of cash into the world. So that's number one. I think interest rates are going to go down, and then he's going to feed the markets in every which way. Does that at all shift your perspective on asset values increasing?
I think there's a lot of obstacles for Trump to actually get that to happen, right? He has to get his person that he wants in there confirmed by the Senate. There's also 12 voting members of the FOMC, so they have to get a majority there, even if the Fed chair is somebody that, Trump is putting in there himself. The mortgage-backed securities that are being bought by Freddie and Fannie, their balance sheet, $200 billion, that's a drop in the bucket, guys. It's not enough to move rates more than 25 bips. The announcement came out and it already went right back up to where it was before. I think we're miscalculating how much influence the government can have at this phase of the market cycle to really push things along further. We're just about there where there's not much left to do, which is why they keep throwing spaghetti at the wall, praying that something will help the affordability problem. Because at the end of the day, that's what we're really talking about here, because we live in a payment economy. But I don't think they have as much control as they think they have. The bond markets are in control.
For every 0.25% interest rate going down, there's 250,000 new buyers that qualify in the market. The reason that rates are as high as they are right now is because the spread has been inflated because of the uncertainty that's been happening with the economy and the inflation. As inflation cools, which it is, there's going to be a lot more certainty in the long-term view of a new buyer buying a home. They're not going to be refinancing in 2 years. They're going to be staying for 5 or 7 years. As that continues to drop, we're going to have the same number of homes on the market. You all said that, in most markets, they're not building like they were in Austin and the Sun Belt.
In the Northeast, yeah, they're not building as much.
And in most other markets, they're not as well. And in some of the big cities, they are, but they're not going to be building because they're overbuilt now. So you're going to have some absorption that happens. In the rest of the country, other than those 10, as those rates drop and these new buyers come into the market, how can you not say with supply and demand that we're going to see an increase in prices?
One of the largest, it's a great question. One of the largest trends out there is the silver tsunami. We have according to a Harvard study, there's about 48 million baby boomers will be passing in the next decade, and 40% of them own a home, and 15% of those own multiple homes. This is going to create, these are homes that are usually outdated. They're in the suburbs, or 3,000 plus square feet. There's going to be a massive supply that comes on the market over the next decade as they sadly pass away in the silent generation. But for different reasons, right? We both agreed that there's going to be more transactions in the future, but for different reasons. My reason is because I believe prices will come down and the marginal buyer will start to come into the market, right? We're about 4 million existing home sales annually right now. We've been grinding along the bottom since 2022. I think that's going to come. We're going to come back as sellers start to capitulate. This stuff takes time to play out. It takes about 8 months for sellers to really get a grip on what's actually happening. And then they decide to sell. You have the marginal seller decline. Then they wait until the next person in the community sells, and it starts to snowball down and show up in the appraisals. And then the buyers are coming back in because the affordability is there. And that's why I believe that transactions will rotate more.
All right, let's go over here.
You cited AI productivity gains as a reason of why things are going to do better. But Amazon just laid off 16,000 people today. Citing productivity gains from AI. I'm starting to see that across the industry. It's attacking more and more jobs. So if that job loss does occur, do you still believe the productivity gains are going to flow into a bull market?
That's a tough question.
It's a good question.
Well,
come sit right here, man.
I mean, the AI is here.
Robots are going to buy that house.
That train that left the station a long time ago. According to Elon Musk.
He's speechless now.
What?
We're going to have robots doing all the work. It's going to be like a universal welfare, basically. That's what he's predicting. But I agree with you that will support the bear case when you have a lot of unemployment. But I'm talking about productivity as far as being able, as a country, being able to do more with less. But when we add a 1% of productivity, that's literally $300 billion to the economy with zero addition to inflation. That's massive. And we're only at the beginning of AI. It's like year 3. They're not even really measuring the impact of AI as of yet.
Let's go right here, straight in the back.
Hey, John, this is probably geared for you. How many homeowners with refinanced mortgages during COVID, 3%, 3.5%, are still sitting on those because flipping to a new house is going to be a mortgage at 300, 350 bips higher? How much do you think that is locking up the sell side of the single family market?
The lock-in effect is very real. Great question, John. And it's actually, there's a great chart I can send out where people actually starting to give up their 3% because the sellers are just they want to move. right? They have a lot of equity in their house. They're willing to give some of it up and change. They're using that equity to go buy their next house, right? We see this with the baby boomers, 62 years old plus. This is happening across the board. The median age of a home buyer is now 61 years old in the United States, which is a crazy statistic. And those home buyers are basically the people who bought 20 years ago, and now they have a ton of equity, and then they're selling that house and buying another house. But we're starting to actually see that shift in transactions move up. So I think they will start capitulating over time. They're going to move, and they're going to find a way to do it. And I think if interest rates do come down, then that will actually speed up that process.
All right, Gabe.
I want to start by saying I love all three of you guys. That said, and regardless of my personal beliefs on real estate, Mo and Mike, I think John kicked your ass on stage. That aside,
What things, Gabe? What did we miss?
All of it.
I don't have time for that, Mike.
Okay, because I didn't hear John bring any statistics forward.
Yeah, which data point do you remember?
I think John is a great debater. My question is actually for John. I genuinely love all three of you guys. John, I know that you hate multifamily real estate, and I know why you hate multifamily real estate. And I know you maybe can't spend time talking about that. But I want to know, in the next 3 years, do you personally plan to invest in real estate? Doesn't have to be multifamily, but any asset class, because of the obvious benefits of cash flow real estate.
Yes, there is an asset
What?
that I would buy.
What?
It would be mobile home parks.
False
and
profit.
it would just be the
What?
It would just be
False
the pets.
profit.
Because look, I mean, you know,
Interesting.
False
if
profit.
you have all this unaffordability, what's affordable? Where's the movement going to go towards? And there's a lot of demand for affordable housing right now. We're building in the wrong price point. So I think it's a great spot. And the modular homes are great too, if you can build the modular homes and things like that. So if you can build a product at an affordable price point, the demand is there for it.
I agree with John. Mobile home parks are also a great place to invest in the next 3 years.
All right, Jordan and them over here. And
John, too. John, obviously, I agree with you on the residential side because I live it every day and have seen it. Austin was first to losing value, and it continues to lose value. Hopefully that's done soon, but I actually have no idea. My question, though, is it seems that there's some conflicting arguments here, because if single family is too expensive to buy and people can't buy it, and I see this, they can't. It's about half as much to rent as to buy in Austin. And they're giving away insane concessions, 2
Half.
months.
Yeah, 2 to 3 months free rent.
half.
Gift cards, all sorts
People
of stuff.
dancing in the street with flip signs, like
Yeah.
we see it every day.
Yeah. But to that point, I mean, Hans points this out. There's not a lot of new permits for building. These are being finished, all these developments, and people are moving into them. So it seems like we will see multifamily, and I know this is market specific, but multifamily values increase as interest rates drop, the rents stabilize, occupancy stabilizes, and rents do eventually go up. Because it seems like if you can't buy a single family house, where are you going to go? You're going to rent an apartment.
Agree.
Actually, somebody said you're going to live with your mom. That's exactly what they're doing. They're moving into their parents' houses. Also, regarding to the permits, we're actually at like a record high of approved permits. They're just not moving into the construction phase.
In what stats?
In single family.
Okay, because it's definitely not happening in multifamily.
Okay, we got one more back here somewhere, right there. Yep. Mike.
Hello. There we go. My question is for John, and it goes along with what Mo was saying about the AI stuff. And the question is really, who gets these productivity gains? Are they going to go to the guy buying the single family entry level housing that's being built everywhere, at least around where we are in Florida, or is it going to go to the owner of the companies that are using the AI, laying off the 15,000 people? And so I feel like the AI thing, like Mo said, the train's left the station. These big changes are coming, something that we've never seen before in our nation's history, in the world ever, actually. And it's how long is it going to take to transition before wages come up to where they can, I feel like a lot of people are going to lose their jobs. And how long is that going to take for our country to absorb and give those people new jobs or some form of new income to allow them to buy again? And how long is that process going to take?
Yeah, it's a great question. We're at a record number of layoffs. Did you guys see that report that came out? We're record number of layoffs since 2020. And it's a lot of these AI companies laying off these middle managers, and they're having to find other jobs. But it's a great question. That's why I said, do you really think that AI will lead to increased wages that'll make it more affordable? Maybe I didn't eloquently say make that connection, but I believe that the companies will get the vast majority of the gains and not the workers. There's going to be people who can do 10 times as much as a single person. What do you do with the other 9 people? How do you repurpose them into something that's going to have a wage that's going to be high enough for the shelter costs at today's prices? I also think, by the way, like self-driving cars are going to change the entire real estate game. But that's for another conversation.
Well, just real quick, like what's that have to do with real estate?
It gives you, if you have to go work in person and now you can live outside of the city 45, 50 minutes, why would you pay double to live inside the city when you can just hop in the car and it brings you there? I think it's going to change the way that...
For all the shit that's around there to go do.
It just makes it way easier to get around, and you're going to be more productive and you can do stuff in the car. I think it's going to change the dynamic over the next decade as the adoption goes through.
Okay. All right, guys, let's give it up for our panelists here. They've prepared.
Round of applause.
Good job, buddy.